Hello everyone. Globus has announced fourth quarter results last week, and we will have a quick analysis of the results. The performance of the manufacturing segment in the fourth quarter was muted. As we discussed in the previous video, the manufacturing segment had a very poor year with yearly revenues falling 5% and EBITDA falling almost 50%. However, EBITDA has started to improve in Q4 on a year-on-year basis with reduced raw material prices. Capacity utilization increased to 81% in the fourth quarter from 50% in the third quarter. The reduced capacity utilization in this quarter was due to a 3-week planned maintenance shutdown at West Bengal for commissioning the corn oil plant. For the fourth quarter, the EBITDA was rupees 3 per liter due to softening of raw material prices following the announcement of FCI rice at rupees 2,250 per ton for ethanol manufacturing. The company expects the EBITDA to increase to 5 per liter in the short term. On a year-on-year basis, regular and other segment volume increased 16% in the fourth quarter to 3.97 million cases from 3.43 million cases. Net revenue increased by 26% year-on-year and EBITDA margin increased to 17% from 14%. However, if we consider the sales sequentially, volume reduced to 3.97 million cases from 4.08 million cases due to seasonality associated with excise license changes and new contracts. From next quarter onwards, the company is expected to benefit from a 4.35% increase in regular segment prices in Rajasthan. Also, we may see volume growth as well. So, in regular segment, we may see increased volume and increased realization in regular segment. Along with this, we may see better margins due to raw material prices softening. ENA for regular segment is fully manufactured from broken rice. As per reports, India's rice export price is at a 2-year low now. Volume would increase from UP as well. However, the margins will be lower. Here, as the company has to procure ENA from outside. The ENA plant in UP is expected to be commissioned by third quarter of financial year as per the company. The prestige and above segment continues to grow its volume on a small base. On a year-on-year basis, volume increased by 62%. Higher volume and realization has led to lower EBITDA loss. EBITDA loss in this segment on a yearly basis has reduced to 16.1 crores from 28.1 crores. The company also mentioned that the prestige segment is in green in Delhi and close to break-even in Uttar Pradesh. The company stands by its initial statement that the prestige segment will break even in 3 years after launch in each state. In terms of sales, Mountain Oak Whiskey leads, followed by Snorsky and Brothers & Co. The company plans to venture into 4 more states in the luxury segment in the current financial year. The company has also launched Cali beer in Uttar Pradesh. In the next quarter, we may see better capacity utilization of close to 90% from 81% in Q4 and EBITDA from 3 to 5 rupees per liter. Finally, improving things for the company's manufacturing segment. Both of these together can double the EBITDA for the manufacturing segment. For the regular and other segment, we may see volume growth coming back along with better realization from Rajasthan, boosting revenues and EBITDA for the segment. Softening raw materials prices should also increase margins. In the prestige segment, we may see losses reducing further. In the current financial year, the company achieved sales of 129 crores against a projection of 100 crores. The sales progression will be something to closely watch out. Finally, after years of underperformance, we may see some positives from the company from next quarter onwards. We have already covered the various risks in detail in our previous analysis. However, any reduction in ethanol prices in response to falling crude oil prices may be a key risk.